Hi and good morning to everybody. Welcome to Stockradar Stocks on the Move for another week. My name is Richard Lee and I manage the stockradar.com.au website for you. Today's date is the 15th of June 2023. Special offers out now this week. Capitalise on the next couple of weeks if you want to get a few free monthly subscription. I want to make a few points today. I've just been thinking about a few things today as I come back from the holidays, a few refresher type thingos. So I want to just mention a few little points to you today before we get into the stocks and into the indices today. So firstly, always stay balanced. Don't become reckless. Don't become fearful. Don't become overly bullish, overly bearish. Stay balanced in your view. Look at your charts to see what they are. We've just had two hard years behind us. Certainly our portfolios have struggled. It hasn't been a trending market, but we can always look forward to better times ahead because we know that's the odds of how markets work. Okay. Market runs 1 year ahead of most of what's happening in the markets at the moment. We're worried about recessions at the moment. We're concerned, everybody's worried about it, but let's just look a little bit further down the track to see what we can see. And some of the markets, like we see with the S&P and the Nasdaq, and even our market, things aren't that bad really. So try and keep that view balanced. So any recession, I think, is built in discounted. When stock markets move up higher, you sort of wonder why, because valuations aren't there, but often valuations catch up to price. So that's what happens when the bull markets run, because they go ahead of earnings, okay? Odds are the market will recover. It is recovering in the US and the S&P and the Nasdaq. We're often in denial when markets start to recover. We think, well, can it be? There's a recession coming up. How can these markets go high? But when I look at those charts today, especially the S&P and the Nasdaq, it looks okay. There are always some stocks going up and some stocks going down. As we know, we've had some tough times lately, but we've also seen some very, very good stocks. So focus on those ones like recent stocks, New Highs, WiseTech, NHF, NIB Holdings, or trend reversals such as AGL and BLD. They've been fantastic. So still there are some stocks going up. A couple of stocks like Seek and Rare have been a little bit disappointing lately. It is what it is. We play the game. Things don't always go the way we think they're going to go. We just need to make sure we respond to those properly as per our rules. Stocks like Domino's and Harvey Norman, don't forget it happens. The ASX, it is what it is. Always make sure you manage your risk. Don't become wedded to positions, okay? Still a numbers game, so accept when you are wrong and get out, always, okay? 50-50 win-loss is an acceptable win-loss ratio. As long as you manage those wins to extend them and keep those losses to a minimum, you will make money. So don't worry about when you take a loss. Make sure it's a small loss. Just make sure your winners outweigh your losses, okay? Profits, losses, income, expenses. It's the same old story, and I'll reiterate that later on in trading tactics. So and always manage your portfolio of stocks. Don't put any in the bottom drawer, say it will come back. Make sure each stock is managed. It's a portfolio of stocks, not just one or two stocks, okay? On the overseas markets, we're seeing gold is cooling, oil is dropping. Well, that might be good for the markets because oil is cheaper, which we've all been worried about. We've been paying high petrol prices. We want them cheaper, and that's a good thing. The S&P and Nasdaq up, as I said, and the ASX has been steady just below the highs. So there are a few things for you just to have a little think about. The markets are okay. Just have a little pause for thought sometimes as to what we're doing, okay? Our mission is to follow trends, new highs, which are momentum trades, and trend reversals, which are buy and weakness trades. That's what we do. Use Stockradar's portfolio service. You can follow either or both, whichever one you want to do, okay? So don't forget about our free blog, which is full of articles on discipline processes, probabilities, portfolio management, psychology, books to read, and of course managing your risk and minimizing your losses, okay? Trading tactics this week, I'm just going to talk about the beauties of charts. They can give you a quick assessment, either up, down. We don't predict the markets, we just follow the trends as they come about, okay? So that's really how we look at the markets these days. Okay, so now let's get to some markets. Well, firstly, we're going to go to the top 10 trend intensity ratings. We've seen some ETFs appear there quite a lot this week. We've got ACDC, which is a global battery tech and lithium fund. We've got AGL, which has had a nice little breakup. NHF, which is looking good, and you can see over there is making new highs. FANG, which is our Facebook or Meta, Amazon, Netflix, Alphabet lot. They're all doing much better than they were. HJPN, which is a Japan currency hedge, which is looking better again, a little ETF. The IHVV, which is the S&P 500 AUD hedged one, which you can all follow safely. And the RBTZ, which is a global robotics and artificial intelligence thing. Now, there's a wave happening with a lot of these new sort of ETFs that come on board. They are waves. I don't think they're going to go for on forever, for long term. They will have spurts and they'll have pullbacks. Okay, so make sure you're aware of that and be careful, because the spurts can be good, but the pullbacks can be deadly. Okay, so that's the top 10 trend intensity ratings. I'll come back to the other portfolio stuff shortly. But firstly, let's get into the markets. Dow Jones Industrial Average at the moment. Again, the pressure is still down on this, but it's sort of been resilient for the last couple of months, really, just holding around between just above 32,000 and just below about 34,500. So it's rotating in there. These highs are just sort of getting a little bit lower, but it's just not really going down, the Dow. And when we look at the S&P 500 and the Nasdaq, the S&P 500 is going up. It's broken resistance. It's moving higher. The volume is constructive. Momentum is good. It's above the average. Trend intensity rating would be 10 if we ran this over the S&P 500 at the moment. Again, remember, when markets start to take off again, we were shocked by all these falls and COVID and things like that. But when we get back to this, I've just lost all that. When we get back to it all, what's happened there? Okay. Lost it all. Okay, so we've just lost all that. Great. Okay, here we go. Here we are back again. Sorry about that, guys. We just lost our charts. It's a little bit touchy in my mouse sometimes. But as I said before, often we are in denial when some of these markets come down, and we get very concerned about it. But we are back up again and moving higher again. And the Nasdaq is the same. It's even better. So it's pushing some of our commercial service and supply stocks. The wise techs and things like that. Well, and Nasdaq's looking very good, and we've got very good volume and momentum. So why would we worry about this? I don't really know. So those markets are looking good at the moment from the overseas, and that will help us a little bit. We've got banks and big miners which are weighing on our market at the moment, and the leaders have been very, very difficult of late. Not a lot's been going on in there, so that's why our ASX 200 has been stalling. But there are some good stocks to run on to capitalise in there as well. Okay, gold futures. Okay, gold is cooling off a little bit. It's having trouble at this 2,000 level, struggling there. Hasn't broken down yet, but neither is it going up. So we've got sellers hitting the market. Momentum's taking a bit of a hit after this quite sharp push higher. So it's certainly not over yet for gold, but it's certainly struggling up around the 2,000 level. Copper in a downtrend again. It's moving lower. The buyers are still out there at the moment, still hopeful, but we are really having pressure down from copper with the lower highs there. And Brent crude as well. We saw the Saudis made their statement this week, which pushed prices down a little bit, but still we're holding up reasonably well. The sellers are there a little bit. Momentum's negative. The trend is still down on crude, but we haven't really got much lower. Since about November this year. So it's really gone sideways for a while. So eventually, these sellers may well give up and go away. But we'll just have to wait and see what happens in there for the moment. But the trend is still down on Brent crude. Okay, let's get to our market, the ASX 200. It doesn't want to go down, but it's trying. We're all worried about the recession, but this is not going down. As I said before, markets perceive the future. They've built in the recession possibility, all this sort of stuff's all built in, and it's not doing too badly. So when we look at a closer look at the ASX 200, we've had a rally straight to the highs. It's come back. It's held there about a 50% correction. It's come back up again, and now it's sort of dwindling lower. No real aggressive selling there. Momentum sort of still just holding or just above neutral there. So really it's not too bad as far as I'm concerned. At this stage, there's not really a big sell-off happening here. So the ASX 200, I think, is holding up reasonably well, considering what those banks and big miners are doing. Okay, so now, once we've done that, let's go to have a look at the stock pick update for us. We'd listed another 4 stocks this week. We're down to 50 of 183. So actually with 41 stocks now of 160 stocks and 9 ETS. So we've picked up the ETS, we've lost in the stocks there. So the stock picks aren't really moving a lot higher at the moment. We've got some good ones in there that have come in. but we've just lost the last couple of weeks. So it's really not, there's not really a breadth indicator there happening for us on the stock picks at the moment. So that's where we stand on the stock picks. The portfolios are reasonably flat. The conservative since inception has been, it's about 8.4% up. I've got 8 out of 20 stocks in there at the moment, 40% equity, 60% cash. The Energizer is 4 out of 5, so we've lost one there. The Energizer 9 out of 10, also we've lost one there, so that's 9 out of 10, so we're not quite 100% equities. I haven't updated those figures yet. The Energizer 5 stock from August 20 is 5 out of 5, and it's running at 9.3%. And the Energizer 5 stock since March 21 is 4 out of 5, so we've lost one there, and it's at 7.2% CAGR. So they're all holding up pretty well, those ratings, considering what we've been dealt the last couple of years. Okay, so now let's get to some stocks. Last week we looked at a few of the big ones, WiseTech, AGL, James Hardie, T&E, and NHF, all running along quite well. We can add stocks like CHN and T&E to that if we want to. But this week what I want to look at is the top rating stocks and the trend by trend intensity, okay? So, we use the trend intensity index. Everybody's very, very interested in the trend intensity index. So firstly I'm going to go through Brickworks. It's the top trend intensity in the industrial materials sector. It's trend intensity rating of 8, and it's starting to make new highs. So it's a very strong trend intensity at 8 there. We've got the market making new highs, the average is up, volume is up, momentum is also positive. So really again here we've got a fairly simple picture of a market making all-time highs, and with all the supporting indexes, this probably is going to go higher again next week, I would think, on Brickworks. Okay, so that's one to watch. Telstra, let me just push this up a little bit so you can see me. Okay, Telstra. Here we are. This is Brickworks still. Sorry, Telstra. Okay, so Telstra is really not looking too bad. It has been for a while. It's now breaking to new highs, as we know here. The trend intensity rating is 8 on here. It's very positive. It's a bit of a sideways movement, a bit of a selling challenge here, but the price hasn't really dropped at this stage. So interest was building here, and this move up here, the sideways movement, just a bit of selling here, but momentum's still positive. It's above the average. So again, in this market, Telstra is one of those couple of leaders, along with, I think, Aristocrat, that is moving higher in amongst those leaders. Okay, so it's looking quite good. Telstra, another one, car sales in the internet sector is also trading trend intensity rating of 8, so it's also quite strong. Sometimes it's hard to see because the market has just sort of crawled higher on this one, but by looking at the trend intensity rating, we can see that everything's okay because it is actually making higher highs and higher lows. It is actually above the average. Volume is reasonable. They've had a little bit of a selling challenge here, and momentum is positive but steady. So that gives us a picture of where the markets really are, because we do get concerned about the ups and downs during the day, but all in all, this looks pretty good. And we've got the all-time highs up here around 26.65, which we'd love to see car sales through there to continue this super trend that's been going on since 2012. Just really has been rocketing stock, along with Seek and Rem and a few of the other stocks, Pro Medicus and stuff, that have all done these huge rallies over the last 10 years or so. Okay, now we go down to Qantas, which I know we've looked at for a while, but again, we've had it's always bad news about Qantas, but it just seems to go higher, as I've said before. We haven't broken down as yet. We're still above the average or just on the average. There is certainly some selling appearing here at the moment, but the price is still holding. Momentum is also still slowing. So the trend intensity rating has moved back down to +7, but it's still positive, okay? So the outlook is still okay for Qantas. It's holding up there pretty well, so I'm quite happy with Qantas at the moment. Until it breaks my stop, I'm holding in there. So we saw that big thump down a couple of weeks ago, but it has rallied again this week, so it doesn't look too bad to me. Okay, AGL, which we all know I've looked at before. It's just a simple trend reversal, and I love this chart because it is very simple analysis. I'm going to talk a little bit more about this in trading tactics, but really, of all the fundamentals and all the corporate movement within AGL of late, it's made it very hard to know what to think. So a chart sort of clarifies that for you and tells us exactly what's going on here. So we've seen this trend reversal pattern here. We can see the buying happening down here, which is very good. Let's blow that up a little bit more. You can see the good buying there. Momentum is solid. It's above the average and broken a key resistance point. So trend intensity rating is 10. So that clarifies for me exactly where we are with AGL, and that's how these charts work and how simple analysis works. Okay. Sometimes the picture is not so clear, and that's fine. It doesn't really work. But when it is clear, that's when you really got to back yourselves and have conviction in what you're doing. Okay, Aristocrat Leisure is another one there, which again has struggled a little bit since it's broke up, but it has still cleared above this area here at resistance. Volume has been a bit middling. The momentum is positive and it's above the average, and we have got an official break. So trend intensity rating is +8. The weight of evidence is still positive on Aristocrat. Okay, so that's where we stand. Again, a little bit of confusing picture because the last 5 weeks have been pretty well sideways, but in the end we've got to sort of make decisions on what we're doing. How you make those decisions is up to you, but I use this to help me make decisions. I bought the stock on the break. Its stop is still in place, so I'm still holding this stock at the moment. Okay, so then we go to let's go down to NIB, NHF. Again, a very simple one which I showed you in the top 10 trend intensity ratings. It's really just made a new all-time high. And that's just really, again, simplicity. We need a simple view in this market because it is very difficult. We're thinking all sorts of different things. Will it or won't it type thing? But this has got a trend intensity rating of +10. So the simple view is what we need in this market. The trend is up. It's above the average. Volume is excellent. Momentum is excellent. Why would you doubt it? Back yourself and follow the stocks. There's a couple of really clear stocks there like AGL and NHF, which are very, very highly clearly in evidence as far as the technicals go. Okay, the next one I want to look at now is this is an ETF. I do cover the ETFs just to give you a trend status. I don't have entries and exits in there, but I just have to give you an idea of the trend in these ETFs. So you can see here very clearly the battery tech and lithium ETF is rallying very strongly. It's breaking new highs. The trend is up. We've had reconfirmation of the trend of the new highs here. Volume is okay. Momentum is okay. Again, why would you doubt it? I don't know. You just buy this with a stop, and that's how that works. Simple analysis will get you there in the end. Okay, now we can go. Okay, Goodman Group's been another one because the property stocks I know have been a little bit of an odd one of late, and we have taken a few losses in there. But Goodman Group again is still holding up, believe it or not. We took the break here, like a lot of those property stocks, and they did break up. And I thought, well, hello, we've got a nice little uptrend developing here. But sure enough, a lot of them did fail. Goodman has held up here, and again, I'm holding this stock still because the trend intensity rating is 7, and it's still above my stop. The moving average it's above the moving average. Momentum, price is okay. It's nothing really untoward there. And momentum is just holding above zero but flat. So there's no real momentum in there. But we are hanging in there while the stop holds, which is what we always do because that's the rules. Okay. So Goodman Group is still okay. The next one I want to go through is to Worley. Again, it's been building since the takeover. In the US, and it's actually done pretty well, really. Since 2020, it's come from about $7 or $5, and it's now up around $16. So we've had a pretty good rise, and now we're starting to push through these old highs here. So this is quite a significant move for Worley. Trend intensity rating is +8 because it has broken above the resistance here. It is above the average. Volume is okay. I don't know if we can see much if I push this up a little bit better. So it's still constructive here, the volume, and momentum is still positive. Not outright, trend intensity rating is not killing it, it's still +8, so it's still in that strong trending zone. And it is trying very hard, Worley, in a difficult market. So I'm quite happy to hold on to Worley at the moment. So this is sort of the trend intensity stocks across some of the sectors, just so you get an idea of what I look at and why I look at these things and why I use trend intensity, because it tells me what to do and where I should be, because sometimes the picture isn't clear, like Aristocrat or like Worley, that you've been going a bit sideways of late. So what we do focus on is what we've got. or simply focus on the positives, not the negatives. It's just like we always, like life, focus on your positives, not on your weaknesses. And that's what we should do. So we do have stocks like Domino's, Harvey Norman, ASX, which are all going down the drain at the moment, but that's the state they're in. They're in downtrend cycles, so you wouldn't buy these stocks at the moment until those cycles change. We look for trend reversals in those stocks. Once trend reversals come, then we look to buy them. But for the moment, they're in downtrends. They may be good stocks, but the price is going down, and that's just the way it is, okay? So keep away from those stocks. If you trade momentum as we do, they are not stocks we will be interested in. So forget about them. They'll be back one day. As I mentioned to you before, the leaders, apart from something like Telstra and Aristocrat, we've got all the banks, we've got all the miners, we've got Transurban, we've got CSL, which had a terrible day yesterday, Cockley. They're all struggling at the moment. So we're really not getting a lot there, and there's not a lot there to push the ASX 200 higher. That's what's also happening as far as the trend reversals we know about. We've got AGL and James Hardie, which is going well. So my money is on the stocks that are going up. And the new highs, I've currently got NIB Holdings and WiseTech, which are doing pretty well, and they're making money for me. Now, one other stock I might look at here for you, just on the small end side of things, is this is Promedicus. If I just blow this up a little bit for you. Again, we've been in this stock for a little while, Promedicus, but if you have missed out on this stock, the opportunity may well be coming here because it did make a new high back here. It's held, it hasn't gone anywhere really. It's come back down, but it hasn't broken down, and it's now back up, making challenging those highs again. Trend intensity rating is +7. The volume's starting to come back in here. Momentum's starting to turn a little bit. It's tested the average and held. So for those that missed out on this one, this might be an opportunity for you. Just mentioning it, may be interested. But trend intensity rating is +7, and we are in this stock at the moment. So it's an interesting stock. Some of those health stocks, tech stocks are all smouldering there and doing quite nicely as we all live in denial of these sorts of things. So there's some stocks for you to watch and to have a look at. Okay, so now I just want to go quickly to trading tactics, and what I really want to talk about today is really just the simplicity of charts and the rules, which I've been trying to talk a bit about today. There's all sorts of fundamentals, myriad complex fundamentals we try and work out. And examples are AGL, which is all sorts of toing and froing going on, but the price is going up for whatever reason. I don't know, but the price trend is up. So if the trend is up, I follow it. That's all I do. I don't predict where it's going to go, nothing like that. I just see a trend, so I jump on it. So the beauty of charts is quick assessment, up or down. So WiseTech and NHF are going up, Harvey Norman, ASX are going down. The choice is yours, which stocks you want to follow. So I don't predict, I just follow trends. And I only report what I see, not what I think. So my ability here is to be clear on what I see and not what I think. Okay, sometimes I might give a few little opinions about a few little things, but don't listen to them because I probably don't really know too much. But, it really is about what is actually on those charts and being able to see clearly what is being presented there. Is my big helper is trend intensity. Once I calculate that and I look at that, I can see exactly what I'm going to do on that stock. So I focus on these stocks because there is not a lot else at the moment. The ones that I've talked about, the WiseTechs, the NHS, the AGLs, the James Hardys, they're going up, they're making money. My portfolios that I run are small, 5 stock, maybe 10 stock, depending on what you want. They're high conviction, so I'm only concentrating on those main stocks that are going up for the most part. Sometimes there's some of the stocks that I get in. I think I've got ResMed in one of my portfolios, which has been there for a while and hasn't really gone much, but it's still holding above its top, so I hold it in there. But I try to focus on those ones that are going up. So we don't need a lot of stocks to make money. 5 stocks portfolio always does the best, better than the 10 stock. So that's where I'm at. So high conviction is what I try and do. All right, now remember, and I went about this last week, make it a business that works. Otherwise, why bother? You'll only lose money. So be a business. Change your ways, change your habits. Don't repeat past mistakes, which you wouldn't in your own business. You would get rid of past mistakes. You would change things to make things better. So put your mistakes behind you and focus on the things that work. Okay, that's the most important thing. Like in a business. Otherwise, you go out of business if you don't do that. So make it a business that works. Remember, income over expenses, profits over losses. No different to any business, and that's what we must do. Okay. So that's really most of it today. I wanted to focus on trend intensity ratings, give you a few tips on what's going on at the moment. Quietly confident about the market at the moment, certainly with some stocks. Okay. So, what's happening at Stockradar? Well, I mentioned to you before, we've got a special offer out for the next 2 weeks. You take up a 12-month subscription, you get 3 months free. You take up a 24-month subscription, you get 4 months free. June 30, that will end, okay? So, charts summarise the price trends for you very simply, very clearly, very easily. It makes it far easier to identify likely price movement. If a trend is up, the odds are the price is going to be higher next week than it is this week. So, and that will be true for the most part, okay? So we try to identify likely price movement, then trying to associate fundamentals to price movement. Sometimes they simply clearly don't relate to each other at all. And we've seen many examples of that over time. And I'm sure you've experienced it yourself. So the special offer that I have in my heading is fundamentals not working for you, and I've used that for a long time because often they don't, and they don't give you the right sort of guidance. Fundamentals are good at analysing what the business does, but not what the price movement is going to be. So then you've got to ask your question, how can I understand price movement, which is that what we profit and loss from, and lose from, okay? Simple observation gives you a great head start, with simplicity being the operative word. Don't overcomplicate what is very simple if we let it be. So we can let things be complicated if we want them to be, or we can make them simple if we want them to be, and that's very hard. The market is a simple place, don't overcomplicate it. Okay, so that's what I've got for today. I hope everybody's having a good week. I hope you're enjoying this market because there are stocks going up and you're not focusing on those negatives or holding those stocks that are going down in your bottom drawer, hoping they'll get back, because they won't for a long time. So stay safe, watch all your trends, make sure you heed your stops, give me a call if you need any hand, and I'll see you again next week for more insights on Stockradar. Thanks very much.